Schuster Audio presents Credit 101. From how to build credit and improve your credit score, to reducing credit card debt and preventing fraud. Your essential guide to using credit to build wealth. By Carol Pope. Read by Jean Ann Douglas. Introduction. If you're interested in securing a financially healthy future, having good credit is key. Your credit helps determine some of life's most important milestones, like buying a house, renting an apartment, or even getting a job. To get the money to afford these next steps, lenders need to see you're able to repay what you're borrowing. That's where credit comes in. This book helps you to understand the facets of credit and credit reports, how to raise your credit score, and more. In Credit 101, you'll find simple, easy to understand, and up-to-date information that you can personalize to help you make the right decisions for your specific credit-related needs. Plus, you'll learn how to avoid costly pitfalls like predatory lending, consolidate debt you may already have, and build credit when you have none. Once you understand the basics of credit, you can work on paying off debts as needed, strategize your way toward an excellent score, and learn how to keep your financial information safe. Within these pages, you'll find practical and financial advice, including what your credit score is and ways to use it to accumulate wealth, how lenders use your score to approve or deny a loan application, how to read your credit report and dispute errors that are costing you, what loans to steer clear of, how to protect your identity and avoid common financial scams, and more. Your credit score is sometimes influenced by things outside of your control, but the power to improve this number lies in your hands. Making changes to the way you prioritize and pay down debt, taking out the right types of loans, and slowly maintaining those upward movements puts you in charge of your credit score. Understanding how to align your life goals with your credit and overall financial reality is the key to long-term economic success. This book will help you navigate those complexities. Whether you are applying for your first credit card, fixing past credit mistakes, or trying to make the most of an excellent score, this book breaks down how credit really works and offers practical information that anyone can use. No matter where you are in building, rebuilding, or taking control of your credit, this book helps to point you toward a healthy financial future. You don't need to be perfect. You just have to start. So, let's begin. Chapter 1. The Foundations of Credit. At first glance, credit may seem complicated. However, given the right access to information and resources, you can positively impact your credit score. In this chapter, you'll start to learn the basics of credit, including what a credit score actually is, what good credit means, the types of debt that are out there, and how debt can be a positive or negative thing. You'll also learn the first steps for succeeding in building, improving, or maintaining that score. Large purchases, after all, are a part of living. So, regardless of the types of debts you'll accrue, having good credit is not only helpful, but necessary. What is credit? Your financial reputation and ability to borrow. In the most basic terms, credit is receiving goods or money in exchange for the promise of payment or repayment at a future date. Anytime a consumer buys something without paying the full cost up front, they're using credit. It's a system based on trust. Some types of credit may seem obvious, like car loans, mortgages, and credit cards. But even leased furniture is considered credit, regardless of whether you plan on buying your items at the end of your contract. Credit also refers to a consumer's ability to borrow. Whether a consumer has good credit or bad credit depends on how risky a lender deems them to be. Lenders, like banks, credit card companies, and other institutions, determine creditworthiness by reviewing factors like credit score, income, and how much debt a borrower already has. Every loan works a little differently, but generally, once a lender approves a borrower, They will give them an open line of credit, like a credit card, a lump sum of cash, like a personal loan, or funding that skips the borrower and goes directly to the entity selling the item or property, like a mortgage. Most often, borrowers must pay interest on top of their loan or line of credit, and these interest rates can be fixed or variable. Fixed rates stay the same for the life of the loan, and variable rates fluctuate with the market. Unless otherwise stated, most installment loans, like auto loans, have fixed rates. Credit cards almost always have variable rates. How lending works. When used correctly, credit can pave a path to better opportunities and greater wealth. There are a few factors to understand when using credit. In these pages, you'll learn the basics behind lending, including how interest, APR, and fees impact what you originally borrowed. Interest versus APR. Interest is what the lender charges on top of the loan's principal amount, or the original money borrowed. It's represented by a percentage, and it's the main cost of borrowing for consumers. An annual percentage rate, APR, includes interest and fees, and it reflects the total cost of borrowing over a year's time. Lenders tend to use interest and APR interchangeably, which can be confusing because they aren't the same thing. Simple interest versus compounding interest. Almost all types of credit come with interest, but interest doesn't accrue the same way on all types of credit. Loans and cards typically have either simple interest or compounding interest. On simple interest loans, interest only applies to the total loan amount. Interest does not continue to build as the loan gets older. Rather, the total amount of interest due goes down as the borrower pays back their loan. So, paying a simple loan back faster will reduce the loan's overall interest. With compounding interest, borrowers pay interest on top of interest. Credit cards are a good example of compounding interest at work. When a borrower carries a balance from billing cycle to billing cycle, they will end up paying interest on what they charged, plus the interest that continues to build from month to month. Fees. Lenders also typically charge fees, additional costs, and each type of loan has its own unique fee structure. For instance, a personal loan might come with an origination fee. An auto loan could have a doc fee, and mortgage lenders usually charge closing costs. Many times, borrowers don't pay these fees out of pocket. Instead, lenders roll fees into the principal. This can help make a loan more affordable in the short term, but the more principal there is, the more interest the borrower usually pays. A quick history of credit. A general understanding of how credit started and evolved will help you better grasp how credit functions today. The concept of credit and debt goes as far back as ancient Mesopotamia, around 3000 BC. During this time, lending often revolved around food rather than physical currency. Farmers would borrow seed on credit from a palace and then pay back with their harvest, usually with interest. Mesopotamians even had a debt forgiveness system. If the farmer failed to yield a crop due to outside conditions, like poor weather, their debt was forgiven. Credit in the modern world, however, generally started at the cash register. Until credit cards were invented, buying on credit was often as simple as starting a tab. Starting a tab was undoubtedly convenient for the borrower, but risky for the shopkeeper. As borrowers started proving themselves trustworthy, or not, stores began keeping lists of customers who reliably paid their debts. Eventually, shopkeepers began selling these lists to each other, leading to an early form of data sharing. These lists led to unfair lending practices, as they didn't just include a person's borrowing history, but also based their creditworthiness on unrelated and unethical characteristics like their race, political affiliation, and neighborhood. In 1841,
To keep listening to this audiobook, I've left you a link in the description so you can do it, at no cost thanks to Audible's 30-day free trial.